Well, we have important news coming in where ITC, where the board has given an in-principle nod for the demerger of the hotels business. This is extremely important news and an extremely important trigger for ITC as well. Remember, ITC has been in focus on account of the kind of returns that particular stock has seen. We'll wait by for more details, but this has been largely in the works for ITC, where the management has also indicated that this is a larger scale plan that the company is looking at in terms of demerging the FMCG business away from the hotels business. So that would be something that would be a big trigger. But the reason why you're probably not seeing the stock move up in terms of an immediate reaction is simply because the stock has seen a huge amount of gains just in the past year odd. For example, this year odd, that the stock has given returns of around 47% on a year-on-year basis. So that's the news which is coming in. The board has approved an incorporation of a wholly owned subsidiary of the company. We'll try and get Mangalam on board to give us more details. At this point in time, remember, the stock itself has given strong returns, so maybe that bit of news with regards to the hotel demerger, though important, has probably already been factored in. The company will hold 40% stake in the new entity. So these are more details coming in. The balance shareholding of about 60% will be held directly by the company's shareholders. We do have Mangalam on board to give us more details. Well, Mangalam, this is a news break confirmed, a CNBC TV 18 news break confirmed, and something which has been on the cards. Give us more details.
Well, it has indeed been on the cards, but we knew that the ball was set to roll as as early as last month itself, and as a result of which this is the first step in looking at alternate structures for the hotels business. The board has gone ahead and indeed given an in-principle nod for the hotel business demerger. Just a little about the hotel business of ITC. It contributed about less than 5% of the overall revenues of the company and the EBIT over the last 1 decade or so. It accounted for nearly 20% of the company's overall capex in the past. So what this basically does is takes the low return on capital business off their books. FY23 EBIT for the business was at a near decade high of 21%, and most analysts value ITC's hotel business anywhere between 16 to 20 times FY25 EV to EBITDA. Remember, Indian Hotels itself trades at around 25 times FY25 EV to EBITDA, so a mild discount to ITC's hotel business. The timing of this is extremely important, largely because the last couple of years have seen a resurgence in the hotel business. Before that, we saw a lot of problems with the hotel industry as a whole: low occupancies, high capex, high debt, and then the pandemic. But thereafter, hotel business has seen a resurgence across the board. We've seen that in the way prices have panned out for all the other hotels as well, the stock prices as well as the average room rate and occupancies. Now, this is a good time largely because going forward, everyone believes that maybe the average room rate will not see the growth that it has seen in the last couple of years, largely because beyond this point, it will start to hit occupancy. So this was the perfect time for ITC to go ahead and demerge their hotel business. In FY23, they did revenues of close to around 2,600 odd crores with an EBITDA of 832 odd crores. But if you just take a look at the multiples that analysts have ascribed to it, anywhere between 15 to 25 times, the price per share of the hotels business for ITC could be anywhere between 12 to 20, depending on the multiple that you give it, between 15 to 25 times itself. But the short point, the stock seeing some bit of profit taking, but a large part of that was anticipated. The street has finally heard from ITC with regards to demerger of its hotel business.
Okay, all right. Well, Mangalam, just wanted to revisit the fact that, what is the reason for this demerger of the hotels business? What is it going to do to the ITC FMCG business per se? Is it because there was too much capex in the hotel business that was weighing the stock down?
Well, apart from that, it's one, unlocking the value. Secondly, hotel business, the company had in the past said that, they will support alternate structures for that business the minute it reaches a certain scale. And scale it had reached, close to around 2,600 crores of revenue, 800 crores of EBIT as well. But like I said, hotels accounted for nearly 5% of the company's revenue as well as the operating profit over the last 10 years, but they accounted for more than 20% of the capex in the past. So as a result of which, it was a business that had lower return on capital than all the other parts of their business. So as a result of which, perhaps demerging that and housing that in a separate entity would mean that the businesses which are currently in ITC, the businesses that are directly owned by ITC, will have higher return on capital, and that would perhaps mean that the multiples that those businesses could enjoy would be a little more as well, as against hotel business, which could be trading anywhere between 15 to 25 times EV to EBITDA.
Okay, all right, Mangalam, thanks very much for that, and congratulations on the big break as well. We had basically reported this in the first week of July, but just want to put